up, everybody? Welcome back to another episode of the Melanin Money Show, right? So, we're in tax planning season, right? Carter always likes to say there's tax filing season and tax planning season. And so we thought, it would be a great opportunity to show you guys how to never have to pay taxes ever again. Now, I don't want to get you guys in trouble because Carter's like the tax guru. So I'm going to let him give y'all more context on that. But yeah, that's what this episode is all about. So Carter, how you doing, man?
I'm doing great, man. I'm excited. I've been waiting on this tax episode for a long time. So you already know I'm ready to get it in. I hope I don't talk the whole time. I'm trying to give you some time to chime in, but this is my jam right here. This is my stuff.
Yeah. So y'all, funny story, right? So on the last episode, we talked a lot about lifestyle alignment, right? And making sure that you're doing a business that aligns with your lifestyle. And Carter lives and breathes that. To the moment that I met him, he was pushing back on certain suggestions because he's like, "Was this gonna mess up my lifestyle?" Because he was already about that life when I met him in 2019, right? And so I think this episode is very important and pivotal because part of what he does to be able to live that lifestyle is being strategic with how he leverages the tax code, right, to benefit the things that he wants to do. And so I think it's just super cool that we're going to be able to go through some of the tax savings strategies that everybody can tap into.
For sure, man. I promise to give people at least $10,000 worth of game in this episode. At least easy 10K. It's a cool, chill 10K.
A light 10K.
Light 10K. You know what I'm saying? So here's the thing, y'all. Before we get into tax saving strategies and how to never pay taxes again, there are 3 things I just need you all to understand on a surface level, and then we can get to some of the game, right? Mm-hmm. So number 1, the tax code is not this scary, esoteric, thing that we just, turn our heads to, right? The tax code is nothing more than an incentive system, right? I like to call it an incentivized game. And just like any game, if you want to win, you have to understand the rules. Very simple, very simple. So rule number 1 is you have to be on the right team. And I love this because we got the Melanin Money swag on. So we got the team jerseys on. So let's talk about
team. Speaking of which, remind me that I got to get these jerseys for fall. I mean, not for fall, but for spring. I got to create some fire jerseys.
Okay. I mean, anything I can wear with my guns out, we good.
I knew.
You already know.
Yeah.
So rule number 1 is you got to be on the right team. Right. What I mean by that is this: the tax code was made to benefit entrepreneurs, business owners, and investors. Right. That's the team you want to be on. The tax code is not meant to benefit W-2 employees. I didn't make the rules. I was not in there on original decisions. That's what it is. Right. So since you know that the tax code is meant to benefit entrepreneurs, business owners, and investors, you have to find a way to get to that quadrant, whether that's quitting your job and starting a business or starting a side hustle or investing more of your money. Pick your poison, but you have to get on the right team. That's number 1. Mm-hmm. Number 2 is that you have to understand what tax write-offs are and what tax deductions mean, right? So we'll talk about a whole bunch of tax deductions and things like that. But once you understand what you can and cannot deduct in your business, you can be more intentional about your spending, okay? So that's number 2. Number 3, so we talk about teams, you got to know when it's game season and when it's the off season. Right. So I tell people all the time, there are 2 types of tax seasons, right? Like you said earlier, George, there's tax paying season and then there's tax planning season. Most people think that they can save money during tax paying season. So tax paying season is January through April, right? January through April, once January comes and the previous year's closed, there's not much that we can do to fix your tax situation and your tax liability. So most people wait until tax paying season to try to start saving money, and it's too late. Right. But we need to understand tax planning season is right now. This last quarter of the year is where you can devise the strategies and have the right playbook to save as much money on taxes and actually not pay any taxes. I'm working on not paying any taxes this year. Right. And that comes with a
spicy to me. Spicy to me.
So those are 3 things, man. I think if people understand those, they'll be good. So George, you'll have to on this episode be like people for me.
Yeah. I'm gonna act ignorant, right?
I'm gonna be ignorant for me, right? You know what I'm saying?
I'm gonna ask the questions that people are probably thinking about for sure.
Perfect. So those are the 3 things. Now, any of those that I just broke down seem like not clear to you, or things that you think, questions that probably came in your head?
Yeah. So, I am a W-2 earner, right? For the sake of this podcast.
Yep.
I'm a W-2 earner. And I started a side hustle, right? I started a side hustle and I'm making extra money, but I still don't understand, like, how does that automatically translate to me being able to start to save money on taxes? So if I just started, let's say I'm making a little less than 100,000, right? And I still got my job. Like, what are some of the immediate things that I can start to do now that I have that side hustle?
Love it. That's a great question, bro. That's a great one. You might be asking that.
I can be, I could be a, saying a
So
guest.
first of all, I want to encourage everybody listening this very good point. Whatever your job is paying you to do from 9 to 5, somebody else will pay you to do from 5 to 9.
That's a bar.
That's a fact. You know what I'm saying? So many people sell themselves short, like, oh, I only got a W-2 job. Well, what are you doing at your job? Oh, I'm doing marketing. You think people out here don't need marketing? Like, so it's just like, I want to get people out their shell of like, yo, whatever people paying you to do from 9 to 5, you can do as a side gig from 5 to 9. And now once you have this side hustle, which I'm about to explain, the tax saving gates of heaven start to open up. So, right. So in your example, let's say you're making 100K at work, right? And then you're making 10K in your side business. Like, how does that equate to saving taxes? Like, what can you write off? What can't you? But here's the breakdown. The moment you start a side hustle, any expenses that it costs you to operate that side hustle, you now get to deduct on your taxes. So let's say you use your computer for your side hustle. Let's say you use your cell phone for your side hustle. Let's say you use your car for your side hustle. And one beautiful thing you'll start to realize is that a lot of these personal expenses that you already have start immediately turning into tax deduction that can now lower your tax liability. So now, if your computer costs $4K, you can write off the cost of your computer. You get a tax deduction for your computer. If you use your car to commute back and forth to clients, you can now get a tax deduction for a portion of your vehicle expense, right? Same thing for your cell phone bill, right? If you start writing up your cell phone and cell phone bill. So what you start to see is like all these things that you're already paying for start to get, you start to get the tax deductions for. So in our example, let's say you made $10,000 in your side business, but with all these write-offs, you have 20K in write-offs, right? So now what happens is these 20K in write-off, it completely removes the 10K that you made from your side business. And now that extra 10K loss goes against your ordinary income at work. So now you're not making 100K in the office. Now you're making 90, but so now your refund gets bigger, right? So I'll give you a perfect example. When I was working in corporate America, I was making close to 100, but they were taking $30,000 in taxes every year.
Ouch.
Killing me, right? So I started my Turo business on the side, and I think I made like 10K my first year or something, but I had like $30,000 or $32,000 in write-offs from my car business. So my refund check that year, because I was working and still paying W-2 taxes, I think I got like a $13,000 tax refund. You know what I'm saying? So things like that.
Send me $2 real quick.
Send me $2. But no, I mean, seriously, so we have all these people that are overpaying taxes. And like I tell people all the time, we all should pay what we legally owe, but let's not leave a tip. You know what I'm saying? We're not trying to leave the IRS a tip. You know what I'm saying?
What? Where's my cash sound? Let me find my cash sound real quick. I need all of that. Like, yo, that's a bar. So again, I'm thinking from the listener's perspective. All right, so I made that 10 to 50K my first year, and then I ran up a bag my next year. Now I'm making 6 figures in my side hustle. So I quit my job. Right? Quit my job. I'm making this bread. And I'm listening to you about all these tax savings and not paying taxes. However, what happens when I need a certain amount of income to qualify to purchase certain assets, right? So I want to buy a house or I want to buy a car. Like, what does that mean when I play the write-off game?
I love that. So I think everything that we do in life, right, comes with intentionality. Right. So there are 2 ways to look at things when it comes to purchasing assets when you have a business. So the first thing I tell my clients is that if you plan to make an asset purchase, whether that's buying real estate, trying to buy a new car, whether it's for your Turo business or not, trying to qualify for a loan, whatever, let's try to do all that in 1 year. right? So that the year that we're going, let's say 2022, we're going to apply, we're going to try to get a real estate property, we're going to get a new car and apply for a loan. Let's do all that in the same year, because now that I know that, I won't write off everything on these taxes, so I can show a little bit more income than we need to. So just enough for you to get approved for the loan that you want, for the car that you want, and for the real estate property that you want. But then any losses that we didn't take this year, we can always use them into the future for next year. So number one, I tell people is that if you're going to try this loan game as an entrepreneur, let's get all loans done in 1 year. You're gonna have to pay a little bit more in taxes, but then every year after that, we're going right back to writing off everything, right? So now we have that intentionality. But also, bro, 6 months of bank statements is starting to replace 2 years of tax returns. You know, me and you just talked about this. I'm about to go buy this car I'm really infatuated about, and when I went up to the dealership to get the car in my business name, they only wanted 6 months of income statements, and they only wanted 6 months of bank statements of my income. That's all they wanted. So if you can show inflow in your business, that can replace tax returns. So you might not even need to report more income than necessary.
Genius. I love it. Okay. So what would you say are a few of your favorite tax deductions? Because there's so many, right? There's so many, like, but what would you say are just some just stand out like a sore thumb, like, yo, I just love this play, right? Just share a few of them.
First of all, your questions today are spot on. We go have you create the questions for every podcast episode, because the questions.
You know,
today,
I try to tell you, I try to be humble, but I am the OG.
Right. You've been doing this for a long time.
But yeah, so what are some of your favorite ones, man? Because I just love, I mean, and here's the thing about having great people in your circle, right? Like, so Carter is an expert at what he does. I'm an expert at what I do, but I tune into some of his lives sometime. And I can text him and get the guy on the phone. You know what I'm saying? So it's like, I'm genuinely enjoying receiving this information. One, as a refresher for myself, and then two, because I know if I was in the audience's shoes, these are the things that I would want to know. So give us the juicy game, right? The game that's in that tax-free living course. Matter of fact, the podcast is only so long, so we're going to get as much game as we can. But if y'all really want to go deep, we're going to make sure that we link a couple of resources that can take you to the next level in the show notes. So we'll make sure you can go deep on this.
Facts. I love it. I'm gonna give as much. I'm giving 10K worth of game here at least. If y'all want more than 10K, y'all can check out the ebook.
Right, if y'all want the extra 90K, you know what I'm saying? Check out the courses, the ebooks, right? Whatever.
So I'm gonna give my favorite three, and you were a part of one of these, so you're gonna like it. Okay, so my favorite three. Number one, let's talk about the car auto deduction, because everybody's talking about that, and I'm actually gonna do it right now today. I'm gonna get the car today. So here's the thing. Let's say for all intents and purposes, I have $200,000 of net income in my business right now, right? That means I'm gonna pay about 45% tax on it, right? Federal, state, self-employment. So I'm looking at a tax bill of $70,000, 80, close, something like that. So I don't wanna pay the government 80 grand. So what am I going to do? I'm going to do things that's going to give me huge tax write-offs. So one thing I did was I want to get a new car. I had my current car for a long time. And the IRS, if the car you're about to get, new or used, if the car you're about to get is over 6,000 pounds, they will let you get a tax deduction for the full cost of the vehicle in the year that you get it. So for me, I was looking at Mercedes-Benzes, and the one I originally wanted was 5,400 pounds. I was irritated. I was like, yo, I really want this car, but it's
some bigger rims.
Yeah, you get bigger rims, right? But and guys, you have to Google the car's gross weight, not the curb weight. Curb weight and gross weight are two different things. The IRS uses gross weight. So I was about to buy this car. It was weighing 5,500 pounds, and I was like, all right, well, I'm gonna find a new car. So the new car I found is 6,400 pounds. So it's over the 6,000 pound mark. The car is about $100,000. So literally, by me going down today, going to put $10,000 in this car and the car is worth 100 grand, this tax year, I'm going to get $100,000 write-off for that car. So let's bring it back to the original example. I had $200,000 of net income. I get to write off $100,000 for the car. Now I just wrote off $100,000 of income. So now my tax liability dropped from 70K to maybe like 30, right?
Powerful.
So go ahead.
And to that end, just for the listener's sake, what it sounds like you're saying is, even though you're putting 10,000 down and you're going to finance it because you probably got great credit, right? You still get to take the depreciation or the write-off, if you will, in this calendar year.
Exactly, guys. That's a huge point I don't want you all to miss. It's not about how much money you put down. It's about how much the car is worth. Right, you get it's called the 179 bonus depreciation deduction. And guys, to be honest, I don't know how long this deduction is going to be around because it's almost too good to be true, right? Yeah. So I need all of it while it's hot.
Like I know I got multiple clients doing this year. Like, you know what I'm saying? Like
multiple clients, multiple cars, right? So I can do this, play 2 cars. If I had a wife, I can get both of us a car, write off both things. Now I went from $200,000 to 0, right? But anyway, for this purpose, I want you all to know that write off the full finance cost of the vehicle. It could be new or used. It doesn't have to be brand new. It could be used. So that's one strategy. So that strategy alone, I get the car of my dreams and I'll save $40,000 in taxes. So that's a 40. I said 10K in tax savings. That's 40K right there. My second tax saving strategy is what's called annual meetings. So guys, listen to this game. Guys, you really have to, and George is laughing if y'all can see for a reason. This is why you have to do business with your friends and with your family members. One, because you want to keep the money in the circle, right? You want to keep the money in the circle. But secondly, equally as important, whatever you do with these people become tax deductions because y'all own businesses together. So for my birthday, my 30th birthday, I decided to have a trip to Medellin for 3 days. I invited some of my closest friends, and I decided to host my firm's annual meeting on this trip. So during the trip, we had daily meetings, we had minutes, we talked about business, we talked about business strategy, we talked about social media, marketing. And so we had my firm's annual minutes. Due to the fact that we had the annual minutes there and my friends are my business partners, I was able to write off the full cost of the Airbnb that we got. I was able to get a tax deduction from my flight. And because they were business owners as well, they were able to get a tax deduction for their flights as well. So I turned my 30th birthday party into my firm's annual minutes and was able to write off the full cost of the trip.
People. It doesn't get much better than that.
I'm saying though, right?
It doesn't get much better than that, man. That's gold. That's incredible. And I just think that like, it just shows that those who have access to the information, right? Or as you put it, understand the rules of the game, those are the people that get a chance to win, right? And so I think that's the biggest takeaway, in this podcast, regardless of whatever else we talk about, is get the rules to the game, right? Like, don't try to go against this, rage against the machine, right? The game is the game. Right?
It's been here longer than we've been here. It's gonna be here longer than we're gonna be here. So don't fight the game.
Just learn how. What they say, they don't hate the player, hate the game. Like, just learn the game. Right. And that way you can do the same thing. Because they was hating again. I don't care about your political views, but like with Donald Trump and people were concerned about, what he was doing with taxes and all that kind of stuff. And I don't know how much of what he was doing was starting the line of legal or illegal, but don't be mad at that. Right. Get smart and understand how you can do it too in a legal and compliant, ethical way. Right. Because Carter, what's the stats in terms of how big the tax code is, but like versus how much of it is based upon like tax savings versus like tax paying? Can you give us that insight?
So the tax code is 75,000 pages long.
Jesus Christ.
75,000 pages long. And of those pages, only 150 are about actually paying taxes. The rest are about loopholes, are about strategies, are about incentive systems, are about the changes. So the tax code, people think is about paying taxes. It's really about planning taxes. Here's the thing. The government says, we're going to get our way in 2 ways. You can either do what we tell you to do, put your money where we tell you to pay, put your money, or we're going to take your money and deploy the capital as we see fit.
Right.
So the reason why business owners get such a break is because guess what, George? We're creating jobs. Me and you were just talking in Soho a couple of weeks ago, how we feel good to have a 6-figure payroll. You know what I'm saying? We're putting money into the economy. So since we're doing that, we get tax breaks for it. So you can either go against the grain and get with it. You can either get mad, or you can get smart. I'm trying to help y'all get smart today. So
exactly, right. So to Carter's point, right? Like we're wearing Melanin money gear, right?
This is my third one. This is the third one. This is the third one.
Yes. Let's do it.
This is you are written all over it. So, guys, let's talk about how to write off your shopping sprees. Right? We talked about how to write off cars and get a tax deduction for that. We talked about how to write off trips or vacations and get a tax deduction for that. Let's talk about getting a tax deduction for your shopping sprees. So originally, the IRS was really against people writing off clothing, right? They said, if it's not a costume or you don't look foolish in public with it, like if it's not like a firefighter suit or whatever, we're not allowing you to get a write-off for it. Model, no model, we don't care, right?
Mm-hmm.
And then this one guy went to court, right? He owned a suit business and he was writing off his suits that he bought for his business. And they said, no, you can't do that. And they took him to court. But then what he said was, look, I put all my logos on my suits. I am a walking brand ambassador for my business. Why is it that my clothing that has my logo stitched on it, visibly on it, why can't I write that off? It's a part of my marketing expense for my business.
Right.
And he won the case in court. So the IRS had to go and redact the rule and say, hey, if you get your logo visibly stitched or pressed, it can't be like a sticker that you can take off. It has to be permanent. If you can get your logo visibly stitched on your clothing that you wear, and obviously your clothing needs to be reasonably costed. I don't recommend you going to Louis Vuitton and doing this, but if the clothes have a reasonable cost and you get your logo visibly stitched on your clothes, not only can you write off the cost of your clothes, but you can get a tax deduction for the cost of your clothes, for the stitching of the logo, and every time you take it to the cleaners. So as y'all can see, we're running Melanin Money merch, the official gear of first generation millionaires.
Yep.
Since I own equity in this company, every time I take this jogging suit to the cleaners, I use my business card, because I'm a walking brand ambassador for a company that have equity in. Mm-hmm. So guys, don't miss this expense. Georgia, did you start getting the Melanin Money like on some Nike jogging suits as well?
Mm-hmm. Long time ago. Yep. Facts. Before we stepped up the quality and knew we were going in this direction, I was like, I'm still getting this tax right now.
Yeah.
So yeah, it's just again, the game is the game. People.
And guys, I only gave y'all 3 strategies. So the car play is going to save you 40 grand in taxes.
Facts.
The traveling pay can save you at least $10,000 in taxes.
Facts.
And depending on how much money you spend on clothes, that can save you another $5,000 to $10,000 a year. I just gave y'all $60,000 in tax saving strategies in less than 60 minutes on a podcast.
Less than 10 minutes, right? Because that was in the window of time for that question. That was one question. You answered
that was one question. Yeah,
so,
guys,
you know what I'm saying?
It's power and information.
Power and information. Yeah, so much power and information as long as you apply it, right? Like, don't be an information junkie, right? We're just, oh, that's super cool. That's like, blah, blah, blah. All right, cool. All right, so another question. At what point, right, do some of these, like, because I think what the misconception with tax savings is that you still have to have a successful business, right?
Yeah, right.
So like, what are some of like the key indicators or like thresholds where like these strategies like start to really make sense versus it being like, oh, like you got a hobby, bro, like IRS gonna come get that money at some point. Like what are some of like the key like indicators or thresholds or things you should be thinking about in order to really make the most of these strategies that you've been talking about today?
Yeah, guys. So here's probably one of the most important points. I'm glad George hinted to this because it's very important. In order to save money on taxes, you have to actually make money. You know what I'm saying? Like so many people, I want to write off all this about to buy the car. I'm like, how much money your business making? Oh, we haven't made a sale yet. Slow down, okay? Slow down, fam. Pump the brakes.
Slow down, bucko.
Slow down, bucko. Pump the brakes. So here's the thing we never want to forget. Making money in a business is always the first priority. Saving money is the second priority. So you have to have a business that is at least profitable for most of these tax saving strategies to even make a sense to you. So that's number one.
Mm-hmm.
Number two is I say, between $0 and $40,000, most of these tax strategies will like work, right? All of these tax strategies will work. The only reason I put that 40K number in there is because once you start making over $40,000 in net income in your business, there's one strategy that you can do is going to save you a lot of money. And I want to hit on this because it's important. Starting out your business, it's perfectly fine to have an LLC. LLC is easy to start up, it's easy to manage, easy to maintain. But once you start making over $40,000 net income, that LLC starts not to serve you anymore because LLCs do not help you save on taxes. Once you bridge that gap of $40,000 net income and start making $50,000, $60,000, $70,000, $80,000, $90,000, you need to upgrade your LLC to an S corporation. Mm-hmm. And the reason I tell people this is because S corps help you save on taxes. LLCs are good for asset protection, but S corps help you save on taxes. So when we're talking about thresholds, the moment your business is profitable, you can start writing off things. You can start writing off phone, car, internet, home office, all these deductions that can bring you back to zero, right?
Mm-hmm.
But once you start making over $40,000 net income, you need to upgrade to an S corporation, because that alone is going to save you 10, 15, 20, $30,000 in taxes, just that one strategy alone. So to answer your question, yeah, that's basically it, man. And the point is, the more money you make, the more taxes you can save, right? You know, if you make 100K, I can help you save 20, 30 easy. But if you make $500,000, I can help you save $250,000, $300,000, maybe all of it. So it's just about the more money you make, the more strategies there are for you to keep all the money. So it's, you know, the more money you make, I always recommend people seek out a tax advisor, a CPA or somebody. And again, we're going to link some options to the show notes and some programs I have for you all. But it's so important, because like, we want to teach y'all how to make the bag, but we want to also teach y'all how to keep the bag.
Right.
Because ask Wesley Snipes. It ain't about how much money you make. Okay. Right. It's about how much money you keeping, King.
That's a whole fact. That's a whole fact. Right. So we talked a lot about these advantages for, you know, entrepreneurs, you know, business owners, those who are incentivized, right, to create, to stimulate the economy. Right. And that's how you got to look at it. You got to change your perspective. The reason why entrepreneurs are getting these incentives is not because the tax code hates employees. It's because entrepreneurs are literally stimulating the economy, and they're getting incentivized for that stimulation, right? There's a reason why Jeff Bezos pays what he pays in taxes, right? He has this famous quote that, like, where he talks about how much he's worth versus how much Amazon as a company is worth, and how much wealth he's created for other people. So people always want to focus on how much money, how much Jeff Bezos is worth. He's like, well, hold on now. This is a $1.2 trillion company, right? I'm only worth 168 billion, which only is relative. But you know what I'm saying? But relative at scale, right? So he's like saying, I made all that other wealth for other people. But I say all that to say, we talked a lot about entrepreneurs and why they get the tax breaks they get. Let's talk a little bit about investors. I know that you mentioned that that's one of the options, you know, that I guess the tax code benefits. Can you talk about some of the tax savings opportunities that you can get by simply being an investor? Because that's something that almost anybody can do, right?
Right. Easily too. And I love this, you know, especially you being a financial advisor. I'm sure you advise your clients on some of these. So one of the easiest ways is to use, especially when it comes to stock market investing, is to use what's called tax advantage retirement accounts, right? So most of you all have heard of IRAs, Roth IRAs, you know, 401ks. These instruments allow you to invest in the stock market, make money, passive money, like sleeping bag money in the stock market. And then you're able to either get a tax deduction for all the money that you invest, or, which I think is even better, that money is never taxed in the future. So a prime example of this is for those of you all that have a Roth IRA or Roth 401k, you can put up to $19,500 in your Roth 401k every year, and that money will grow tax-free. Meaning once that 19 turns into 500,000, and you take that money out, you pay zero taxes on any of the gains, any of the profit. And the reason the IRS does that is because you're investing, you're providing capital for some of our biggest companies to go and become even greater and make our economy even better. Yep. So IRAs and 401ks, for those of you who are working, if you're not maxing those out, you're doing yourself a disservice. Like I tell people this all the time, my first $6,000 every year has a name on it. That name is Roth IRA. I'm not going to the club. Like, I don't like going out on New Year's Eve because that money I'm spending on that bottle is supposed to be on my Roth IRA. You know what I'm saying? My first $6,000 has a name on it. I feel like if everybody did this simple lesson, they first $6,000 went to a Roth IRA, you will be a millionaire on accident. That's a tax-free millionaire on accident.
Tax-free millionaire on accident.
Easy.
Just by being an investor.
Yeah. So do you provide, I mean, I'm sure when you talk to your clients, like when you're giving people investment advice, do you bring up the tax advantage accounts?
Absolutely. Right. Absolutely. You know, whether they're entrepreneur or some of our grandfather, you know, working professional clients, like, yeah, I mean, you know, IRAs, SEP IRAs, right? So 401ks, like all of these options that are tax advantage to be able to defer that, right? And more importantly, what we're doing for our entrepreneur clients is we're showing them how to redirect, right, money that would have gone on to Uncle Sam, right, into wealth building instruments. So instead of writing that check to Uncle Sam, now you're able to visualize, okay, since I deferred that money and put it into a tax advantage vehicle, how is my wealth able to grow on my behalf for money that ordinarily was going to go to Uncle Sam on the front end, right? And so just understanding that is so powerful, like just how you can simply be an investor and prevent yourself from paying unnecessary taxes in that calendar year to build and grow your wealth.
I think you summed it up great there, man. It's all about, at the end of the year, man, two things are gonna happen with your money. You're gonna give it to the IRS, or you're gonna invest it in ways that's gonna help you save taxes, right?
Mm-hmm.
The money is gone, period. It's going somewhere. But the fact and the knowledge and the information to know that you can direct it is so powerful. And again, the last point I want to give before we hop off is we have to debunk the theory that, but if you're not paying taxes, you're a bad person, like, whatever. Because I have this conversation with people like, well, everybody's supposed to pay taxes. No, everybody's supposed to pay what they legally owe. Mm-hmm. But if the government wants to use my money to fund unemployment, right? That's cool. Right. But instead of them doing that, how about I keep the money, reinvest it in my business, hire somebody, and now instead of providing money to put somebody on unemployment, which keeps them in a state of not wanting to do more, I can now give them a job, give them purpose, give them direction. So never feel guilty for not paying taxes as a business owner, because instead of giving money to the government to give unemployment a link, you can use that money to provide that same amount of money to provide somebody with a salary, give them a job, give them peace of mind, give them purpose at the same time. So I think that's one thing people need to understand.
Big facts, man. Well, guys, I mean, you know how they say, information, was it this is a conversation? This has been a conversation.
Conversations can't change compensation.
Change compensation, right? We just gave y'all, Carter just gave y'all some immense game, right? And I hopefully I did my best to think about the things that you guys would be considering, because this is valuable insights, guys, right? And again, we just want you guys to get the rules to the game. Obviously, there's multiple ways to tap in on a more meaningful level. If you want to take immediate action on these tax strategies and expound upon another probably 194 of them, right? You can grab Carter's, tax-free living ebook and or the course to be able to dive into that.
Yeah, and we actually just changed the course into a full mentorship program where they get monthly calls with me, and I help them strategize their own tax plan, because I want to do more, right? Like I want to do more. So the resources to the ebook and the mentorship will be in the show notes. We'll talk about that more. But guys, I'm just excited for y'all, because like I tell people this, the easiest way to make more money is to pay less taxes.
The easiest way to make more money is to pay less taxes. And with that, what else is there to be said? So guys, thanks again for tuning in to another episode of the Melanin Money Show. It's been a blast. I had a great time just sitting on the other side of the microphone, just asking questions that I hope you guys will find valuable. So if you kind of like this interaction where maybe one of us who has a different level of expertise is shining a light on certain topics, let us know. We'll maybe switch it up and do some stuff like this. Obviously, we were about to start having our first guest on the show. We wanted to make sure that we got 10 plus episodes under our belt so that y'all could get to know us before we bring other people into the house. But guys, just let us know what you want to hear. If you love this episode, please give it a 5-star review. Make sure you're following us on social media, because we're always giving out extra free game over there. And most importantly, make sure you subscribe on YouTube so that you can actually see us while we're talking. Because if you're listening to this on Apple Podcasts, you're only getting half the sauce. You're not getting the 50, right? Of being us in person.
I gotta get the merch game. I
get the merch game, right? And of course, I'll be remiss, right? If you're going to join Team Black Wealth, right? If you're going to be the official Melanin Millionaire for your family, you have to grab the uniform, right? So head over to shop.melaninmoney.com and tag us in your merch photos, right? We would love to see how you're rocking it. We would love to see, what we really would love to see is we would love to see you in your merch while you're doing a wealth building play. Whether it's taking action on one of the things that Carter gave you, or whether it's, open up your investment account, buying your house, right? We would love for you to tag us while you're making these Melanin Millionaire moves.
Love it. And with that, we are out. Peace.
Peace.